It is Friday, May 26th, 4:30 Eastern Standard Time, U.S. time. This is Mike Wade, your guest host for today, and welcome to the U.S. HUBB Market Update. And with me, as always, is my trading brother from another mother, Rob Roy. How you doing, Rob?
Good, Mike. How are you?
Good, good. I got back to Costa Rica on Saturday, so I'm out now in the tropics and loving it.
I can only imagine. In Florida here, we're dealing with a tropical storm, so already early in the year. Yeah, so much for our holiday weekend.
Yeah, the rainy season starts in Costa Rica in May and it goes through October, and it rains pretty much like it does in Florida during the summer months. So you have to get used to the rain here. All right, well, welcome everybody. We're going to hop right in here in just a second. Just a couple of quick reminders. Get your questions into the Q&A box. We're going to give you an opportunity to have Rob and I look at some of your stocks that you're interested in. And if you have any questions at all about trading, feel free to ask those as well. Also, as you go through this, if you like what you see and you want to subscribe to the channel, please feel free to do that. So Rob, let's get started. The markets are toppy, tech is hot. Where's this market going next, man? Can you give us some light?
Welcome to this week's U.S. market update. Yeah, pretty interesting. I have the actual S&P chart shown from Tuesday night. Here's where we sat at Tuesday night. And during Tuesday night's TradeFinder, which we do every Tuesday night at 9 p.m. Eastern time, it's free. You can register on the link here, or you can go to our website at ewotrader.com and register there. We talk the markets, we look for trade ideas, and we have a live Q&A at the end. We have a great community that shows up each and every week, great questions. So love to have you sign up and join us this coming Tuesday. But here's where we were, and the commentary that I made on Tuesday night's TradeFinder was with the market closed in between these areas of 410 and 420, which seems to be the tight trading range that we're in right now. It was likely that we were going to come down and test 410, and then we'd see what happened from there. What would be the next move? Would 410 hold? Would we break 410 and head down lower, or would we move back up towards 420? And there's a chart of what's happened since then, and just right on cue. Look where the low was on Wednesday, 409.88. I'd say that's pretty close to 410. And then we've moved back to the upside, and at the close today, we closed right at that resistance area of 420. We put on the Elliott wave chart here, and you can see that, yeah, there's a 5-wave pattern in the SPY, but it's not very far ahead. And I think we need to be really careful about that. I'll talk a little bit more about that in a second, but the financial news that came out today was the Fed's PCE deflator. That's supposedly their favored inflation indicator. That came in a little bit hotter than expected, and immediately the Fed fund futures went to a 56% chance that they're going to raise 25 basis points in June. Now, if you remember, the commentary from the Fed governors has been kind of along the lines of, we may pause in June, but we're holding out the possibility of a 25 basis point rate hike in July, and we still have the rate cut priced in September. So it's like, what is the Fed doing all over the place? But now, based on the Fed fund futures, 56%, it's a little bit more than a flip of a coin, so I wouldn't put too much weight in that. But it's interesting that they've moved it from July to June as far as potentially 25 more basis points. So one of the things that I wanted to point out here when we look at the chart, and I'll put the moving averages on, you know how much we look at the 10-day moving average, and look what happened on the low today. We tapped the 10-day moving average on the low, closed near the high of the day, right there at 420. I'm going to take the Elliott wave chart off, and I do feel like there is a potential that we could have a little bit of a false breakout here. The market loves to do head fakes. So I've been saying cautious optimism, caution is the theme. We still have this massive ascending triangle pattern here. I think something of significance is going to happen in the not too distant future here in the market. So when I put the Elliott wave pattern back on, could you envision? I could. A little bit of a break to the upside, just hit that wave 5 target, but that being a head fake and a potential move lower. Who knows? It's just something I think that, again, we still need to be cautious on. Yeah, it was a nice day today in the markets, but we're also heading into a holiday weekend. A reminder that the markets are closed on Monday in observance of Memorial Day. So hope everybody enjoys their holiday weekend. And there could have been a little bit of short covering mixed in with this, but nonetheless, the bottom line here with the S&P is that we're sitting right here in this 420 area and 410. So 410 support, 420 is resistance. Something else that I think might be interesting when we're trying to decide what's the likelihood going from here. Do we break to the upside? Do we move lower? There's a chart, and guys, if you could put that M2 chart up, it shows that we've had the largest contraction, or one of the largest contractions of money supply in a very short period of time historically. Can the market power higher with that kind of contraction in the money supply? Again, I think that's where some of my caution lies here. Anything's possible, right? I mean, the Fed could start cutting rates sooner and expand the money supply. They did expand it a little bit, which I don't feel is fully reflected in that chart, but maybe it is when they opened up that facility for regional banks to get past that and allowing them to borrow. Maybe there hasn't been that much borrowing, so maybe there wasn't much of an expansion. But that chart, I think, is something everybody should pay attention to as far as the potential of how much higher can we go with that kind of contraction in the money supply. Another thing that's interesting, and guys, if you have that chart as well, is the forecast from analysts moving forward. You can see on that chart, the gray lines show recessionary periods. And what normally happens is that when we move towards a recession, the analysts bring down their earnings estimates. You can see from the line there that each time is kind of tipped down a little bit as far as earnings estimates. But notice where we are now. Analysts have been raising their estimates for the next couple of years. So are the analysts on the wrong side of the ball? I've said this often, in the fact that you have to remember that an analyst's job is to make money for their firm that employs them, not for us. I know all the media, they always want to tout what analysts are saying, etc. But their job is not to make money for us, it's to make money for their own firms. So are they behind the ball? Are they sucking in the retail trader? So I know I'm being a little bit on the cautious side here of just being wary of a potential break to the upside here, but it being short-lived and the potential for a move lower from here. Anything could happen. Maybe we break from here and that causes a whole bunch of short covering, which would likely come in, and then we're off to the races from here. But going to be really interesting to see what happens over the next week or two. Remember that the month will end midweek, and with a little bit of a move to the upside, perhaps the analysts keep the market to the upside as they move into the end of the month because they want their bonuses, etc. And then we have the start of the June trading month towards the end of the week. I think maybe what I'm trying to say is towards the end of the week, we may have a better idea of what happens from here. Do we break above 420 or do we move back and test that 410 level once again? Looking at interest rates, and boy, you guys have been responsive. And so we appreciate it when you guys make comments on our YouTube videos. And I was talking about how rates moving to the upside. Wow, is that money coming out of the bond market? I think a little bit of it has. When you see rates moving to the upside like that, I've been saying this, if you watch these videos for a very long time, that the range between 34 and 40 is kind of the sweet spot for the market. I think that is worked out pretty much so far. But notice where we are on this wave 4. It's now at a 79% retracement area, which means according to Elliott's own rules, it hit the 78.6% level. So that means that's disqualified. So you take that off and we don't really have an Elliott wave pattern on interest rates anymore based on Elliott's own words and his rules. So if we creep up all the way towards 40, I think we're going to get to an area where rates do become a little bit of an issue here for the markets moving forward. So I think that's something to consider. And then looking at the dollar, this is the one that's confounded me in some of your comments along both rates and the dollar moving to the upside have been, well, the Fed's going to raise the debt ceiling. I think there's been a lot of chatter about it, but we all know they're going to push it to the 11th hour. They're going to get their agendas done. Does anybody honestly feel like they're not going to raise the debt ceiling? I don't. I just think they're going to make us wait to the very last minute. But why is the dollar moving to the upside? Is there concern globally? Are we looking towards the potential of a global recession? And other countries are seeing this and they're starting to buy into the dollar. Now, some of your comments used the analogy or the example of the fact that, well, because we're raising the debt ceiling and we're expanding things further, that could cause a short-term rise in the dollar and rates. It's a very valid argument. A lot of people make it. My viewpoint is that the market is always looking 6 to 9 months ahead. And I feel like that's already priced in. Now, what's going to occur with the raising of the debt ceiling, to me, is priced into the market. Now I could be wrong. I'm wrong a lot, but I feel like there's something else going on here. And the dollar moving to the upside like this has been difficult for the metal sectors, et cetera. And once again, if that wave 5 is done and we're moving back towards this wave 4, I think the market can handle that. But a move above that, a move above that recent resistance point at 40 on the TNX, I think spells potential trouble for the market. These are all things to watch for as we move into next week. When we look at the chart of the DIA, that's the one chart of the major markets that is not in a qualified 5-wave pattern. The good news is we did break above the 330 level, which looked like we were about to break. Notice there was no follow through on the break of 330. And so we stay in this range here between 330 and 340. So we have 410 and 420 on the S&P, 330 and 340 on the DIA. So when you break one of these major points of support, resistance, moving average, triangle, whatever, you need a follow through day. We didn't get it. So here we are back above 330. Are we just testing that level, or are we set up to potentially move back to 340? Again, questions I think will be answered next week. Now check this out. This blew me away today. Now we all know, what's been going on in the tech sector and all the commentary about AI, et cetera, but what a move in the Qs today. Massive move to the upside here. We broke above the 320 level, which had been resistance. And so we've gone here. Now, the two things that concern me: one, the wave 5 is now beyond 100% extension with a 50% wave 4 correction. You're looking for 100% wave 5 extension. We're beyond that now. When we look at the moving averages, you can see that we are overbought. No security in any time frame, goes very far from the 10-day moving average. That's an overbought scenario by anybody's definition, I believe. And the last thing that is concerning to me is the fact that this last move has been vertical. Is that kind of a blow off top? We had this gap here. And is that, the FOMO type of thing, fear of missing out? Is that, I don't like vertical moves because vertical moves often get retraced. I would not be surprised to see next week or in the near future, the Qs come back down towards this 330 level, filling this gap here and satisfying this overbought condition. So I think that's a concern. So I still remain cautious on where we can go from the markets. You have to trade what the charts show you. When you start trading by where you think the markets are going to go, that's setting up for failure. The market is always right, no matter how much experience you have or knowledge you have. The market doesn't care what you think. I learned that the hard way a long time ago. The more I learned about the markets, the smarter I thought I was getting as far as where the markets were going to go. And then the markets will spank you pretty hard about that. Take you behind the woodshed, as you said last week, Mike, and I like that analogy as well. They will remind you who's boss. So to me, trade what the markets are telling you. There's no better indicator than Elliott Wave, in my opinion, to analyze what the markets are telling us. So they're telling us right now the Qs are just a little bit overbought. The last of the charts, the IWM, which can kind of be viewed as a bit of a the last comment on the Qs is the fact that them moving up with rates moving up is extremely impressive to me. I just think that shows how much interest there is in the whole AI thing. But a lot of people look at the small caps for an idea of risk on, risk off type environment. You can see the support at 170. That's been key. We've noted this numerous times in the past weeks, months, really, that what was a range between 170 and 190 has tightened up between 170 and 180. And look where we are. Right smack dead between it at 175 with the 10, 30, and 50-day moving averages all converging at this exact same spot with where we closed today. The IWM is telling us nothing right now, in my opinion, as far as where we could go. It isn't a qualified 5-wave to the downside pattern, but that doesn't mean anything either unless we break below 170. If we do come back down and break below 170, then we start to bring this wave 5 target into the mix. But until that occurs, we have to look at the IWM as being in a trading range here between these levels of 170 and 190. So that gives you a bit of a rundown on the markets. We'll finish up the market update as we always do with the VIX. And here we are right back down again. We keep testing this level here around 19, which has been the support resistance area. I mean, you don't have to be a great chart reader to see that 19 has been a key level support resistance at least this year, of all of 2023, even going back into December. So we've been bouncing off of it. We broke below it here in early April, and we've been testing that level as resistance now. What was support becomes resistance. So here we are with the VIX back down below that 19 level again. Are we coming down here early in the week? That wouldn't surprise me. Again, talking about the end of the month, perhaps we hold this move into the end of the month and we don't really find out where the market's going to go till towards the end. Perhaps next week when we're doing this, we'll have more information. But are we coming down to test 17 and see if that's a pretty tight trading range really here on the VIX? So usually when you have all these things line up with this, we're looking for some sort of a significant breakout. Which direction is it going to be? I don't think we're too far away from finding out. It could be a couple more weeks, but we could also find out by the end of next week. So just, protect yourself. If you're long the market, that's what the market's telling you to do right now, but please have your positions protected. This is not a load the boat, back up the truck, any of the old analogies that you used to use. What do you think, Mike?
Man, awesome update. I'm right with you. It's hard to know where the markets are going, but I think you built a pretty good case for there is a good possibility of some kind of correction. And Rob, have you ever heard this saying before? When the VIX is low, it's time to go. You've heard of that before, right?
Oh yeah, I used to make a living off of that.
Yeah.
When the VIX is low, it's time to go. When the VIX is high, it's time to buy. And I made so much money off that back when the VIX was calculated on the OEX. You've been trading long enough to remember that. And then when they switched it to the S&P, I've found it far more difficult for me myself personally, but I made tons of money at the end of the 90s, early 2000s, et cetera, just trading that commentary. The VIX was between 20 and 35. When it got down to 20, you sold. When it got up to 35, you bought, and I did extremely well from there. So yeah, I think you're telling your age, Mike, there by talking about that that old expression, but I'm with you. Yeah, I did very well off that.
Yeah, so did I. I think my hairline's telling the story as well.
I hear you. Well, that's part of the reason I wear a hat, as we talked about last week.
I don't have a
Chuck Norris thing. Not just the Chuck Norris analogy. It's getting a little thinner up there.
Yeah. I know the feeling. All right, everybody, we're about to go into stocks of interest, but before we do that, if a reminder to check out the Q&A box. If you want us to look at some stocks a bit later, please type them in. We're going to do that right at 5 o'clock roughly. And then Rob, have you heard of this company called Nvidia? I think it's time for stocks of interest.
Let's take a look at Nvidia. Yeah, that's the story of the week, isn't it, Mike? I mean, that has really been the story of the week. What I wanted to do is go back and show you where we were looking at last week. We talked about this in TradeFinder on Tuesday night. We also talked about it in our insiders meeting. Here was Nvidia moving to the upside here. It's in a wave 3. Now, wave 3 is the strongest of all the Elliott wave patterns. And what's interesting is the software, which to me, this HUBB software is the best Elliott wave software that exists. Find out more information about it at hubb.com, HUBB.com. I've tried all the Elliott wave softwares that I know to exist. I don't want to say I've tried them all because there may be some I'm not aware of, but I've tried all the ones I know to exist because I'm such a believer in Elliott wave, trading it since 2001. And the way this works is you have a wave 3 here. So this 4 does not mean we're in a wave 4. It's telling you that if the wave 4 started now, this is where you could expect a correction. But for some reason, the algorithm is identifying 380 as a level of where we could go. Now, when you're in the wave 3, if the wave 3 continues, oftentimes the wave 3 will go to that wave 5. So what I've done here is I've drawn lines that correspond with this tap box, time and price projection. And, we were moving into an earnings report. I get asked a lot, do you shy away from trading directionally when an earnings report is coming? And my answer is always the same. If there is a strongly qualified Elliott wave pattern and it's backed by our indicators, and I like to look at the DMI as my primary indicator, and you can see that the DMI was showing the ADX moving up. It had not reached 40 yet. We had a little tick down, but still good separation between the two directional indicators. So the DMI was constructive of a potential move higher, but we're moving into earnings and who knows what's going to happen there. But a reminder of this, and I actually helped one of my son's friends set up a spread, an out of the money spread. $137 put into the out of the money spread, looking for a move to the upside here. It's a 370, 390 spread, and bam, look where we went on the earnings report yesterday, absolutely pegging the 380 level, which is where that wave 5 was, and then a little bit more of an upside today, and he generated a almost 700% gain on a very cheap spread for a young guy just learning the markets. So now he's a believer in Elliott Wave, who just really didn't understand it. He wants to learn more about it, and I think others should. Now, what's happened is because the wave 3 has continued, now the wave 4 and wave 5 targets have relabeled. So there's a potential to move up even higher on Nvidia. But my question to you, Mike, is you're the fundamental guy. I mean, you're the best fundamental analyst that I've known, and we've known each other for a very long period of time. We all know that Nvidia is a very high valued stock. In your opinion, looking at it from the fundamental side, is it time to short Nvidia?
Well, last week we were talking about,
not to put you on the spot or anything.
Last week we were talking about dividend growth and the power. That's like having wind at the back of the trade, a bullish wind. And, when a stock runs, that's about a 25% gap up after earnings. When I see something like that, it's like the fundamentals have come to fruition. And from there, I don't know. I mean, it's possible that the stock sets higher highs. But I think probably at this stage, especially given, I agree with you. I think the markets are over, especially the tech market is overbought. So this could be, in my I wouldn't go bullish. Let me say it that way. I wouldn't go bullish on Tesla. I'm sorry, on Nvidia, unless it starts breaking up to higher highs. But I think sideways, maybe down at this stage. Now, if it does break resistance, I'm a big fan of support resistance coupled with Elliott Wave. That's a 1-2 punch for really getting directional signals and triggers to enter and exit. So if we get a higher high, maybe above 400, and there's some volume behind it, then I might go long. But now it's wait and see to see how the market reacts.
I couldn't agree with you more. I mean, when we look at the chart, the thing I just talked about, the separation between the 10-day moving average, this big gap to the upside, I kind of feel like, we've done what our forecast was, enjoyed a really nice move to the upside there. But when you think about the valuation, I think it's hard. And from somebody like you that puts, a lot of emphasis in the fundamental side, how do you value the AI thing? Does this not remind you, Mike, of going back to 1999, with the internet and anything that had I or E or anything in it? We didn't know what the internet was going to do. Yeah, .com, et cetera. Yeah, exactly. We didn't know what those valuations were going to be. We didn't know how to value it. It feels the same to me. What do you think? I mean, it feels the same with all this AI stuff. We don't really know how to value where AI is going to take these companies. And, are we in the early stages? I've heard somebody say that we're in the second inning of Nvidia, but gosh, that looks like it's needs a rest. I'm totally with you on the best case scenario is sideways to slightly down in the near future. And then we can see, are we able to break above 400? I'm totally with you there, Mike.
Yeah, on the AI front, I used to code it. My earlier life right out of college, I actually coded expert systems. And, AI is all about having computers mimic human behaviors, sight, voice recognition, speech recognition. And I'm not certain that the companies that are espousing AI capabilities, that there's actually AI there. So I think it's more speculative at this stage. There are some cool products that are coming out. Tesla has a car that drives itself. I've done that. I actually rented a Tesla and I let it drive itself. So things are coming, but I think it's like, the latest hype. And I'm not certain that it's as deep into these tech companies as we may think, or maybe as it looks. So I'm with you. I'm not sure. We'll have to wait and see.
Yeah, I think that's that's where we both are. So you're talking from a fundamental standpoint, from a technical standpoint. I think we're both in the camp of wait and see. I'd like to hear what the viewers think. I mean, if you're watching this live, go ahead and post a comment in the chat. Where do you think Nvidia goes from here? And if you're watching the recording on the EWO channel, also like to hear your thoughts. Does Nvidia go higher from here? Do you think this is the early innings of AI? They're so far out in front of everybody else that we power higher in Nvidia? Or is this a point where, hey, take some profits, Nvidia may pull back to the downside? So we've given you our viewpoints. I'd love to hear yours.
I'm just looking at the chat box, not yet, but when they come in, I'll let you know, Rob. So Rob, you live in a hot real estate market in Florida. What's going on with the home builders?
That's a fact. Boy, you're not kidding there. So let's bring up a chart of the XHB. I've talked about this in numerous of our broadcasts that, I consider myself to be pretty good at chart reading, pretty good at Elliott Wave. I scored 100%, a perfect 100% on the visual spatial part of my IQ test, which gave me probably a higher IQ reading in the end than it should have. And if you're not familiar with what that is, that's where they give you charts. And then you're supposed to say, what's the next chart in the sequence? So, maybe technical analysis is kind of where I'm supposed to be in life, but I have been totally wrong on the home builders. I haven't seen it. I've been trying to go into your world, Mike, on the fundamental side, and it's been hard for me to understand it, but you are right, especially where I live, which is in a newer area in Florida, and there's building everywhere you look. However, when we take a look at this, you can see that the wave 4 corrected only to the 38.2% level. So it is showing us the potential to move higher. But remember, the wave 4, just sometimes that'll bounce off a fib level, and then we can go lower. We still have a 50% correction or a 61.8% correction lower to go. Or we could hold here on this fib level and move up to that wave 5 target. I would be stunned to see that happen. But again, I've been wrong since going all the way back here. It looked like back in early February, I looked like a genius when I thought that the housing market was overdone. And we start moving down, and I'm like, you're so smart. And then turns around and heads back to the upside. I did not see this last run coming in the home builders, but there's been a lot of talk about the commercial side of real estate. Jamie Dimon actually came out and was warning that when you see the numbers start coming out from these regional banks, this could be another hit to the regional banks. Places like where I live, Florida, Texas, some other places, we're doing fine on the commercial side. But when you go to New York and other big cities, San Francisco, some of the big, metropolitan type cities, the vacancies, it's like a ghost town there. And what's going to happen when, these companies have to start showing these bad loans on the commercial side of things? I even read or watched some commentary yesterday on people that were comparing this to the housing bubble back in 2007, before the great financial crisis. That's kind of scary to listen to. But can the commercial side have as much of an effect as the residential side? I don't know. But it was certainly something to take into account. So maybe in the end, I'll be right on it, just wrong on timing, which happens a lot. But looking at this chart, perhaps a little more to the upside, but I think, serious caution, wave the yellow flag here on the housing market is really important.
Yeah, and the other thing that I think about here, Rob, is with the rising interest rates, mortgage rates are rising as well. So that should have a dampening effect on demand for home builders. I'm a little surprised it's up like it is too. I'm with you. I think further downside seems more likely. We shall see.
Yeah, that's a really good point, Mike, is because with interest rates going to the upside, and a lot of people have the convertible notes and their mortgages are not fixed. So I'd actually encourage my girlfriend, who had a moving rate mortgage, and I convinced her to convert it to a fixed just before interest rates starting going to the upside. But if we start to see a lot of those people as the rates adjust, can they afford these homes that they bought when rates were lower? That's an interesting point. I talked about the commercial side, but yeah, you're bringing up an interesting point on the residential side as well.
Yeah. Did your girlfriend refinance?
She did.
Okay,
yeah,
good.
She got 3.125. Can you imagine that on a fixed rate? Yeah, she hit the absolute bottom. Of course, how relationships go. I'm not going to get credit for that, but I really
no, of course not. Do that. Only when you're wrong about stuff.
Yeah,
you hear about
yeah,
it, right?
100%. Yeah.
All right, Rob, thanks a lot. That's a really great prognosis on the home builders. There's been a lot of questions in the QA box, and as well as we mentioned it earlier, AI is on the rise. Tesla. Let's take a look at Tesla. What's up there?
Nice day today on Tesla, and notice that the wave 5 pattern is relabeled here, which I think is important. We pretty much nailed Tesla back when it was at 180. We had talked about this during TradeFinder back in here, and said if it can't hold this 180 level, we're probably going to 160. Didn't think it would happen in one day. but that's what ended up occurring. So we had this level between 160 and 180, and that's what we discussed in this week's TradeFinder. It looked like we'd broken above 180 and we're trying to test it. Could we hold that level and bounce higher? Well, the answer towards the end of this week is obviously yes. We held the 180 level, looking to move back to the upside, but you can see we're bumping our head against a little bit of resistance here at 200. So with Tesla, if you've been following along, you've probably done pretty well here, but a little bit of caution maybe here on Tesla. And I know that Tesla viewers, it's getting pretty close, Mike, between Tesla and Nvidia on the most loved stock out there, but it's still the two top ones, I think. But if you're long Tesla, I think be a little careful here. We're a little bit overbought, but not that much, but we're at some area of resistance here. However, with that said, if Tesla could break above 200, somehow break above 200 with follow through, you look at this move lower from here, the potential of a big break to the upside is there. So you've got kind of this conundrum, if you will, of we have resistance that we've got to get through. It could hold and we move back down again. But if it was able to break above that, all these people, I shouldn't say all these, because I don't think the percentage of short interest on Tesla is very high, but some of the shorts would likely cover, and we could get a rally spurt above 200, but we got to get above that first. So again, kind of the theme we've been talking about, Mike, is caution right here, and not just in the market in general, but specifically on Tesla.
Yeah, totally. Tesla's got the winds of AI behind its back as well, right?
It does. Yeah, they're involved in there, and people just don't want to underestimate Elon, nor would I. So, I mean, certainly, one of the geniuses of our time, and he knows what he's doing clearly. So, yeah, it's just that's a very hard stock to short. But just be careful. Watch it. You pause now. See if it can get above 200.
Yeah, with you. Support resistance, man. It's one of the best things to put on a chart. In addition to Elliott Wave, of course. Let's go to another AI stock, Rob, Microsoft.
Yeah, they've been in the news, and going back to your comment there of, when we're looking at creating a technical system, I'm a believer personally, I believe you are as well, that no matter how good you have one indicator, you never rely on one technical indicator. In my opinion, Elliott Wave is the number one, and if there was ever a rule you could only use one, I'd use Elliott Wave. But to create a good technical analysis system, you want to have your primary indicator backed by some other confirming indicators, and couldn't agree with you more that price to volume action and support resistance levels, no matter what technical analysis system you like or using, those two things never go away in their importance, in my opinion. So looking at Microsoft, look at this move all the way up to 190%. Again, it looks a little bit overblown to me today. Very similar chart here with this gap up and this vertical run, which makes me a little bit nervous here on this last piece. So again, are we getting to that FOMO? Is this the blow off tops that I've been talking about? But there is a potential that when we're here, we're right in between fib levels, between 161.8 and then 261.8. So could Microsoft go higher? Yeah, it could. Again, we have no way of knowing, what the valuations are going to be assigned to all this AI stuff. I don't think anybody knows. But for the short term, I do think we're a little overbought. If you could get an entry back down here, perhaps we give up this vertical move, come back down towards this area of support around 310, close this gap here, get back to the 10-day moving average. I think, if you wanted to go long Microsoft, it's hard to say go long now, in my opinion. I think you could get a better entry if you were just a little bit patient here and let it come back. But yeah, good call, Mike. That was it's just a stock of interest on Twitter today, and you can clearly see why.
Yeah. Microsoft just keeps going up. One of the things about living in Costa Rica, Rob, that you'll need to know when you come down here is that there's no Amazon here. I can't order Amazon. And in States, I'd order Amazon once or twice a week. But here it's not. But Amazon is hot. Let's talk about Amazon, another tech AI company.
Oh, that's really interesting. I had no idea. I didn't know that. So, gosh, you're missing out. I mean, I live on that. The world has changed so much. I used to hate going to the mall, but now I don't even have to go to the store around the corner. I order everything from Amazon. The convenience is just so awesome. But yeah, you're right. Here, another one. But their AI technology that they're talking about, and And I think Microsoft particularly called them out. Google specifically called Amazon out, saying they're coming after them from an AI standpoint, but it didn't affect it today. So big move to the upside. These moves to the upside today, again, wants to feel to me like we're heading into holiday weekend, 3 days of no trading. It feels to me like there was some short covering moving into this move today. Either that or the retail traders were just jumping in because they're seeing these moves to the upside. Neither one of those is very conducive to, another short-term move to the upside. This one doesn't look quite as tired as some of the other ones. The only vertical move was today. You can see that we moved higher. We came back. We did test the 10-day moving average. We did everything that you're supposed to do. You got a little separation here. This is my perfect example here. What I talk about, got a little separation from the 10-day. So what did we do? We came back, kind of consolidated sideways, slightly lower. Perhaps that's what Nvidia does. Came back to the 10-day moving average and then bounced today. So of the charts that we've looked at, I think this one looks a little less overdone than some of the other ones, but no doubt a big update today. And I would say that this 130 target is probably in the cards in the not too distant future. Maybe this one can go there at the beginning of next week as we head into the end of the month, and traders want to extenuate these gains for their end of the month bonuses.
Hey, Rob, you know what I like about this one is the stock has breached and closed above 120. It's a round number. Round numbers tend to be resistance levels. There it is right there. Yeah, exactly.
Yep.
So for me, I'm with you. I think of all of them, I like the fact that it has just breached a resistance level. If it holds maybe for another day or sets another higher high, then that could be the next the signal for the next run up to 130. I'm with you.
Yep, great point. Resistance clearly there at 120, moving the chart over. Everybody can see it, and the break above it. And I'm totally with you on a little bit of follow through beginning of next week. And so that is. I think we're in agreement here that the most impressive chart today, at least yesterday was Nvidia, but today is Amazon. That's breaking above that level is pretty impressive.
That's making my list. I'm looking at that on Tuesday. Awesome, man.
Yeah.
Thanks for showing that. Let's go over to Coinbase. What's up with Coinbase today?
Yeah, this is, we're doing stocks of interest because we like to show stocks that our viewers want to see. For some reason, this was heavily talked about on Twitter today. Not really sure why, because you can see there's a lot of consolidation here through the 60 level. I know that Coinbase has been in the news a lot. They're facing a lot of regulatory issues. Regulators seem to be coming after them, which has put a halt to this move to the upside here when it looked like it was off and running. But I will highlight again, look what happens on these vertical moves. So vertically up here, can't hold that, came back down, but it tested support, but then it tried to run vertically again. Couldn't hold it, tested 70, came back down, tested the support at 60. So here's our 50, excuse me. And here's what you were talking about with the support resistance, Mike. So we bounced off support, but we're just kind of in no man's land on Coinbase. So a lot of interest in the stock today on Twitterverse, but this was just kind of in a trading range here. I don't think you do anything with Coinbase. And of course, you have to keep that in the back of your mind of the regulators could say anything at any time to move the stock. A break below 50, and then I think you probably have a pretty good short down to potentially support down here. But a break above 70, if it can do it without doing these vertical moves, then perhaps we can have some upside from there. But looks like a trading range right now on Coinbase for me.
I'm with you. I'm looking at this chart thinking calendar spread, right at 60. Profit as long as the stock goes nowhere. That's an advanced option strategy. We're talking stocks, but these are great charts, Rob. Thanks for bringing them forward. Well, we talked about Coinbase. We better talk about Bitcoin. What do you think?
Yeah, I can't leave out Bitcoin, especially if we're going to bring Coinbase into the mix. And I like your idea of the calendar spread, some sort of a sideways strategy there in that trading range. Now, I've been talking about 27,000 here for the last couple of weeks. We came down here and, we had the breakout and vertical move and retrace that. You can go back and look at the previous recordings, and I'm going to go through all that again. The key has been 27,000. Could we hold that? I use the analogy of, the fingernails holding onto a cliff here. That's what 27,000 is to me on Bitcoin. And we broke below it yesterday, but managed to not have a downward follow through day. But we didn't get back above 27,000 either. And I know everybody's watching like it trades 24/7. I understand that. We know that, but it also has an end of day print. as other stocks do for end of day charting programs like this. But the key is we didn't follow through to the downside, at least not yet. So the question becomes, we're going to probably come up and test 27,000. Can we get back above it, or are we going to break it, hold 27,000 and come back? I've always had in the back of my mind, and you've heard me say this, this was such a vertical move here from 20,000 to above 27,000. We never gave any of that back. And if we can't hold 27,000, then we probably do give some of that back, at least back to this wave 3 high here around 25,000. But with Bitcoin right now, I think you got to still be very cautious here and not go long. I know they have the halving coming up first quarter of next year, which has always been a bullish event historically. We've done a lot of educational stuff on that. But that's still far enough away that a test at least down to 25,000 wouldn't be out of the question. Hard for me to go long Bitcoin right now until we can break above 27,000 with some follow through.
Yeah, I'm with you on that one, Rob. All right, everybody. Thanks a lot, Rob. Really great stocks for us to consider, me included. We are going to go into Q&A right now. And before we do that, though, if you like these kinds of charts, I use HUBB software as well. In my estimation, I've been using it for 20 years or so now. It is some of the best directional software on the planet. If you are, I would say I don't know anything that's better, Rob. I know you've said that before as well. It's an awesome platform. If you want to know more about it, check out hubb.com and you'll see a lot of information there. All right, well, let's head into Q&A. We've got a couple of stocks here. We're actually a bit long here. So if you don't get to your stock, then please know that Rob, you have your TradeFinder on Tuesdays at 9 p.m., correct?
That's correct.
So you can, if we don't get your questions here, just join that free webinar with Rob on Tuesdays at 9 p.m., TradeFinder, and he'll answer all your questions there. Rob, the first stock of interest today from our community is JEPI, J-E-P as in Peter I, JEPI.
All right, well, here's one that I hadn't looked at. So it's equity income ETF. So that's kind of an interesting thing to look at. Maybe kind of I'm not super familiar with this. It is a JP Morgan product, and people get on me when I talk about Jamie Dimon and everything else, but JP Morgan was or is one of the original creators of the Federal Reserve, and so I do pay attention when Jamie Dimon talks. People can have their own personal views, but I think it bears watching. So the fact that this is a JP Morgan product, I think, is interesting. But as far as looking at this chart, it's in a trading range right now. And with the discussion that we had on home builders before, could it break, or is the income from the bond side of things? Again, I'm not super familiar with this ETF, so I'm not really sure what the income producing facility is from this. So just looking at the chart and staying away from that side of things, it's a trading range between 54 and 55. Tried to break 55, couldn't do it. Tested it again in early May, back up to resistance, couldn't break it, back down. We're testing 54 now. So the key here is if it could break above 55 with follow through, because notice it tried here on the 28th, but no follow through day, and that turned it back. That was your cue. And then we tried to break below 54, again, no follow through day, so back above 54. So just highlighting the concepts that we've been talking about, Mike. But I just think 54, 55 is your trading range, and you watch this one, a break above 55 with follow through, you could go long. Break below 54 with follow through, you go short. But right in here between 54 and 55, I think is a pause.
Yeah, I'm with you as well. You know what? The other thing, Rob, if I turn my head upside down, we talked about Head and Shoulders last week. It's not a very clean, a super clean one, but there is the formation of a general upside down Head and Shoulders pattern as well on this one, I think. If you agree, I think I can kind of see it. Yeah.
Well, I absolutely, I totally agree with you. So, and it's not that poorly formed, is it? So there's the left shoulder and then the head down here. And I think we did talk about Head and Shoulders last week as well. And so here's the right shoulder. So that would indicate perhaps a run up to 55 and then see what happens from there. And if you missed last week, you can go watch the recording. But as Mike and I talked about, when you see a Head and Shoulders, you look at the range from the top or the bottom of the head, in this instance to the neckline, and then if it breaks, it still has to break. So it's just like a triangle, it's still got to break out. But if it does, then you look at that same distance above the neckline as a potential move to the upside. So if this one could break above 55, good spot there, Mike. If it could break above 55 with follow through, then you could be looking at a potential move up towards 58, but it's got to do it first. But yeah, you're right. It does look like a pretty well formed inverse head and shoulders.
You know what I love about the way you teach, Rob, is you don't really call direction without some parameters. So you're looking for very distinct support resistance levels, triggers that are either yes or no. And with that, you get your edge, your directional edge. It's a beautiful way to trade.
Oh, thanks. I appreciate that.
Yeah, I do too, man. Thank you so much. Last one, Target, retail. What's Target?
RJ as we used to call it, right?
RJ.
Yeah, in its day. This is a good one to look at, though. Nice on the retail side, especially when you can see, the consumer. But I find this chart really interesting. So this seems to be more of a target specific problem, because that PCE deflator that we mentioned earlier, and we showed you the graphic of it, one of the things that was in there to offset the fact that the inflationary side was a little high is consumer expenditures were higher than expected. We know that the U.S. consumer is a hardy thing. And yeah, we're going to find ways to spend, even though the credit card debt is approaching historic levels. So we are spending on credit cards now. All the stimulus money is gone, and we're still spending for now, but apparently not at Target with this move to the downside and this break below. We've been talking, both Mike and I, on the importance of support resistance levels throughout this entire broadcast, and 150 was support. You can see it there, and we've broken it significantly. I think we're probably a little bit overdone here. There's the 10-day moving average, happens to be right around where that support was that was broken. So we're oversold right now. We're a ways from the 10-day moving average. This has been a vertical move to the downside. So the vertical moves get retraced, whether it's to the upside or the downside. So perhaps, at least for the short term here, we're going to try to hold. I would be surprised if we didn't try to hold 140 at the beginning of next week with some sort of a little bounce, maybe even enough for a short-term tradable bounce. I know a lot of our viewers like to find short-term opportunities. So perhaps a quick long here, but when we're talking about that, these are short-term trading opportunities, like a day or two. When you're this far overbought or oversold, you can't hold them very long. You get a 1 or 2 day move, take a quick gain and go. And so I just want to highlight that, because I talk about the separation from the 10-day moving average so much. But with support there at 40 from December, or 140 from December, and the fact that we're here, perhaps early next week, you get a little bit of a bounce. But to go anything longer than just a real quick trade, it's going to have to show us they can get back above 150, and that's a ways to go.
Totally agree. Hey, Rob, we've run out of time for today, but how can our community get more of this? Would you tell us about your TradeFinder real quick?
Yeah, just join us on TradeFinder. If you've joined us in the live broadcast, aside from the beginning, we do TradeFinder every Tuesday night, 9 p.m. Eastern time. We talk the markets, we do look for trade ideas, and we have a Q&A similar to what we've done here. So it's a great community. They ask wonderful questions. We have fun doing it, and it's free. So what can be better than that? So sign up for it. Love to have you in next week's TradeFinder, especially with where things are right now. Perhaps we have a significant move. I mean, we have a holiday weekend, and then Tuesday is going to be first trading day. What a great Tuesday to be at your first TradeFinder.
No doubt. And we got the debt ceiling issue going on as well. We might see a pop in one direction or another on Tuesday. Perfect timing. Yeah,
we're getting to the end of the month, and Janet Yena, good God, I can't even say her name, has said that June 1st is Janet Reno. What's her name? Yellen, thank you.
Yeah.
Janet Yellen has said that June 1st is the Janet Reno. That shows my age. That's going back a ways. That's going back a ways. So when she was in the administration, but yeah, she's given us a June 1st date for the potential running out of money, the last that the Treasury can pay their bills. So yeah, next week, you're right, is approaching that 11th hour. They've been saying that. I think they'll push it till then, but yeah, we may have some information there on Tuesday as well. Good point.
I'm going to come check it out on Tuesday, Rob. Hey, Rob, really well done as usual. Thanks everybody for joining us. We'll get back together again next Friday at 6:30 p.m. Eastern time. We'll see you then. Have a great weekend, everybody. Remember that Monday is a market holiday, no trading. Rob, what are you doing for your day off on Monday?
Well, I had intended to play golf, but that's going to be up to Mother Nature. The weather forecast is not so good with the tropical system, but yeah, I agree with you. Thanks for joining, everybody, and enjoy your holiday weekend. Hopefully your weather's better than ours.
Yeah. See you, everybody. Thank you so much.
Take care, everybody.